speaking with you here on CNBC TV18. Anand Shah is now joining us. He's head of PMS and AI Investments at ICICI Pru Asset Management Company. Anand, good afternoon. Good to have you with us here. Thanks very much for your time. Stocks have, especially in the PSU space, have had a one-way kind of a rally. And there has been so much hand-wringing about what's been going on. But momentum clearly is, sort of carried those stocks to absolutely very high levels and pullbacks now for the last 2 days or so. In the broader market also, we are seeing telltale signs of, some amount of profit booking. Is this the one, which gives us that, meaningful kind of a pullback? Or you think, like what we saw in January, we saw, a 2-week, 4.5% pullback, and that's when the market turned around and made a new high. What's your sense, Anand?
Hi, very good afternoon. I think you already, sort of explained that we had a very sharp rally in pockets of the market, and that's been self-correcting. I'll take a little step back and say, look, these are interesting times in the markets where while we had a very solid run in the overall markets, broader markets are doing well. The good news is that the broader economy is also doing well. So if you look from 1st April 2021, the earnings per share of at an aggregate level, at the index level, would have gone up by almost 100%, 90 to 100%. The markets are up between 40 to 50%. The broad market I'm talking about. So to that extent, it's tricky. Look, if the markets had not rallied and the economy was doing well, it was an easy answer. And if the economy was not doing well and markets would have rallied, then it would also been an easy answer. But that's why, as I'm saying, from stock picking, being careful about the segments of the market, the sectors in the market in which you are, is very, very important. If you see even today's fall, or for that matter, last few days' fall, again, the large caps are not falling as rapidly as you're seeing some pockets of markets, be it mid caps, small caps, or even PSU. So I think it's part of this is liquidity, part of this is retail investors' euphoria. I think that's a little bit of pullback. Coming to, I think, to me personally, these pullbacks are very healthy. As I'm repeating that the overall economy is on the strong wicket. Obviously, we have global headwinds in China. We have global headwinds from US interest rate hike leading to slowdown in the Western world. The developed world is sort of slowed down, and we are hearing from many companies talking about slowdown having some impact. I think broadly the economy is doing well, and to that extent, such corrections are very healthy. To that extent that the markets don't become overrated. We are not talking of very expensive valuations from which an incrementally money making becomes difficult.
Anand, afternoon. This is Reema here. Did you have any PSU stocks, whether in railways or defense, in your portfolio, or even in the power sector? Most of these stocks have corrected. Will any of them make it to your buy list now, with the fall that we've seen over the last couple of days, or would you still wait it out? And what have you made of the earnings misses?
So again, broadly, we have ownership in select banks and select power companies. And to be very honest, we are not very disappointed with results. Yes, there is quarterly volatility in results. But when I see broadly over the last 2 years, generally banking as a system is doing very well. And within that, PSU banks have also not disappointed. To that extent, results is actually not the problem, if you ask me. Notwithstanding, there is always obviously a quarterly volatility. As I'm again repeating, I think one needs to be careful. There has been a sharp rally in select stocks, and many of them might not merit that sort of valuations, or many of them might not merit that sort of rally. And to that extent, there is this pullback is what we are seeing. But broadly, again, we've been fairly cautious. We've been also guiding. We've been also communicating that, on the back of such a sharp rally, one needs to be using more systematic investment route rather than doing a lot of lump sum investment in these markets.
Okay. By the way, not much is changing on the screen. The mid-cap index is still down 2%, reeling under losses. Just to talk about the approach from here on, Anand. I mean, we were just talking to Bharat Forge right now, and it was a little strange because not always do you have an industrial company in that part of the market coming out and issuing almost like a profit warning, almost as that, sounding very cautious about their exports outlook for the next year. How are you looking at industrials and the whole capex-related stocks as a whole? And I mean, I'm not asking you for a stock comment, but just what do you think of a company like Bharat Forge sounding so cautious on its overseas markets?
No, I think we've been overweight both manufacturing and manufacturing allied businesses. So yeah, part of the sectors also been part of our buy list. To be very honest, it's not unique. We have seen quite a few companies across chemicals, across auto hangs, across industrials, who have complained about slowdown in US and Europe. Particularly, we've also been more often hearing nowadays the word called destocking, right? We were just discussing that, this many times we haven't heard destocking in our career, but that's another thing that post-COVID, so there was a shortage during COVID. The supply chains were tested. So when there was an opening of post-COVID, there was a very strong restocking cycle. And now post that strong restocking cycle, as the commodity prices went up, there is general inflation in the environment, which causes some slowdown in the demand. And then now as the supply chains have sort of settled down, we have seen across textiles, across auto hangs, across industrials, we have seen also across chemicals, especially in agri-chemicals, we have heard this word called destocking. So I think part slowdown is also because of US and Europe slowing down, but partly is also a destocking cycle, which will be more transitory.
All right. Hi, Anand. Good afternoon. Anand, I wanted to ask you about some of those winners. Trent, in one of your funds, I think you'll have a holding out there, and that was one of the results of this season. It's been one of the stocks of the last couple of years. How do you view some of these names? Results are coming, you all got in early, but at current reckoning, would you just hold on to the position? Would you consider even booking out in some of these stocks that have done very well for you all?
So consumer, again, we've been, to be very honest, within the overall B2C space, we have been underweight. But within that, we are looking at pockets where the Indian middle class is incrementally either spending, which is partly we have overweight positions in airlines or hotels, more to do with entertainment, because that's where incrementally we would be spending, but also the way we spend. And organized retail is another area where we've been overweight. So while on overall consumer space, we've been underweight, but there are pockets within the consumer that is growing faster than so overall consumption would not grow very rapidly. And to that extent, we are seeing a sort of disappointment in earnings across many consumer-facing businesses, FMCG and others. As you rightly said, Trent is an exception, but then we are seeing that the way the Indian middle class will consume, the way he or she will shop, is also changing, and that's where unorganized to organized in the entire retail space, be it grocery, be it quick commerce, be it food delivery, be it the apparels. I think we are seeing pockets of industry sectors and companies which have got the business model right. And that's very important because not all apparel companies could do well. As we have seen slowdown warnings across other apparel companies also. Trend has been, in that sense, some of an exception.
Okay, Anand, we'll leave it there. Thank you very much for your time. Great speaking with you here on CNBC-TV18. Speak with you soon once again. Well, 130 points lower. It's not, selling off or anything more, but we are down 100 solid. 21.